Yo, Will, what's up, man? So you had asked me about the idea of placing orders at like prior swing highs and swing lows, which is sort of the basic premise of technical analysis. So I just want to give you a quick little primer on kind of the way I look at that same exact idea. So what this chart is futures of the S&P 500. That's basically a general gauge of the whole US stock market that everyone uses. And this chart is a daily chart. It's the past year of trading, basically. So let's look at what's happening most recently. So here's the big rally in December. This is early December, December 6th. And I'm guessing this big rally is kind of expectation that new tax bill is going to pass. So right here, you break into these new all-time highs, and it consolidates a bit. And then it breaks out. This is probably the announcement of the passing of the bill, and it pops up out of this range, and now it's doing this higher rotation up here at these all-time highs, kind of chopping around for a couple days. So let's dial it in a little closer. Which monitor here? Yeah. So this is a 1 hour chart. This is the past 20 trading days. On Monday, it rallies up to all-time highs here, pulls off a little bit, and on Tuesday, it takes another stab at the all-time high to the penny. So to what you were saying, I mean, clearly here's a case where if you had a sell stop sitting right here at the prior high, as it pulled off for the rest of Tuesday and sold off, that looks like it would have been a really easy bet to place. The problem is, in hindsight, you'll see little double tops and double bottoms like that all over charts, and it gives you this kind of illusion of predictability. And the reality is trading on the right edge of the screen is actually a lot harder to consistently make money like that. So what I'm actually doing now as I look at these stocks here in this range at these all-time highs, I'm really only interested to see what happens when the market sells off down to here. You see I have this alert in right now. And even here, it's not just reflexive, like if it hits here, I'm just going to buy. What I want to do is start watching the auction process down around here. I want to see the market take a stab down into this prior range, and I want to see it get bought up. I want to see it put in a little consolidation up here. And then going forward, now at a short term, I have a long bias, and I'm looking for stocks to buy when it starts lifting, because now I'm expecting rotations back up towards the all-time. Now, to continue that point, if the market does sell down into this level down here, and it kind of falls back into this range, and now the little subsequent rallies are hitting this like a ceiling, now I've got a short bias. Now I'm expecting the market to look kind of weak, and now I'm looking for things to break down, and I'm looking for stocks to sell. Okay, now let's look at Bitcoin real quick. This is the general daily chart for Bitcoin, right? We know what it looks like. For a year, it's been going up, and then all of a sudden, this parabolic just fucking skyrocket, right? It spikes all the way up to here, pulls off, it's kind of bases around here, takes another stab at the all-time high, and now for the past 6 days, it's been selling off pretty aggressively. So I'll bring it up on this chart. So this is the Bitcoin futures contract. It's only been trading for 6 days. It's still the same 1 hour chart. Let me get the volume profile off. So if I were to look at this market as it's selling off, in the context that I had mentioned before, I would look at like, let me get a drawing here. I would look at like a region. No, I don't want that. The fuck. So I'd look at this region here as like a little consolidation zone, right? And then as the market broke down out of this and it rallies back up into it, it fails to hold. So once it started selling off and it couldn't hold this, it couldn't regain this level here on a rally, this is a good area I'd be looking to sell. What the fuck's my little recorder at?